Good evening. This side Rahul Magan here is a Group Chief Executive Officer Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational and multi-asset hedge fund. But like I repeated many a times, we are proprietary hedge fund. By proprietary, I mean no third party. I repeat, no third party can invest capital in our funds. We trade in commodities, but like I said, we never invite third party to trade in commodities. Whatever positions we are taking in commodities, whether this is gold, whether this is silver, whether this is palladium, or any other commodity or natural gas, it is backed up by our own capital. Neither we share our strategies about the gold, silver, and all in the public. Yes, we make knowledgeable videos and we are having our OTT over the top platform where we have a knowledge series covering the commodity. That's separate. People often ask me that we wanted to trade in base metals. It's good because we need to understand that commodities is of two types. Number one, they are agriculture commodities, which are known as soft commodities, and we are non-agriculture commodities, which are hard commodities. Now, hard commodities are further divided as precious, which includes gold, silver, platinum, and many more. It includes base metals, copper, zinc, tin, lead, and all. It includes oil, which includes oil, various form of oil and oil related products. And it includes gases, which includes natural gas, CNG, LNG, and variety of gases. Guys, you don't trust that even in 2022, we do not have a single research report in the public. I repeat, we do not have a single research report in the public which can confirm the total volume of commodity trades on a daily basis. You would be very surprised that we have ample of reports which cover foreign exchange, currencies, deliverable contracts, but when it comes to commodities, we do not have a single report in the public. People often ask me how we can trade in commodities, and my opinion is always the same. Always prefer the CFD. CFD stands for Contract for Differences. 99% investors, I repeat, 99% investors who call me, and when I answer them that you should take position via a CFD contract, which is called Contract for Differences, they look at my face and say, what the hell he's talking, because we heard contract for differences first time. So I give you a small story. A very large commodity brokerage house, they booked a consulting call with us last week, and they wanted to understand how the commodity worlds and everything behave, basically a kind of training program for their employee for 2 hours. So there were around 10 to 12 employees, and we were giving them training that how the commodity work and how the CFD works, how the futures work, what is the valuation issues, and so on and so forth. You would be surprised to know that 10 out of 8 employees, I repeat, 8 out of 10 employees, which means 80%, were not aware that what the hell is CFD. contract for differences. And literally, they asked me on the face, Zoom call, basically when we were giving trainings, they asked me on the face that how do you know that this is CFD? This is the level of intelligence we have people, those who claim to be a commodity trader. And then I asked a simple question that what are the two forms of CFD? Remember, CFD work in a relatively different way in Singapore compared to their work in India. They work relatively in a very different way in United States compared to their work in Singapore. This is what we need to learn, that what exactly is that. People sparing lakhs of rupees. I have seen people sparing lakhs of rupees as a margin when they take a position on exchanges. It could be MCX, it could be Singapore Stock Exchange, it could be any other stock exchange. They are sparing lakhs of rupees as margin. Then we have taxes on these margins, this is separate. Then we have brokerage on these margins, which is separate. If you compute the whole cost, you will take a pill of the headache because the cost would be as much you can't think of. And what would if I tell you that CFD contract is available at a fraction of cost? So fraction of cost which you are currently, I would say, paying on any exchange, the CFD contract for differences is available at fraction of cost. The basic problem we have in the system is that compromised media never highlight the CFD contract. And this is the beauty of the compromised media. And 99.99% of global investors heavily rely on the media. They believe that if media is not discussing the CFD contract for differences, it means something like this do not exist. But it do, and heavy volume, that's more important. This is Rahul Magan from Treasury Consulting Group, 9899242978.